How are you all? I'm fine, little bit fine, not exactly. I took two Panadol and thought, okay, let's go for the streaming for a small amount of time. It won't be too long, trust me, brother. So don't get bored. But before going further, please let me know that you can hear me. Please write it down that the voice is okay. You can hear me, okay? Then I would love to go for further dissection. I always ask this beforehand. It's because you all of you know I had the problem, sound problem, so I'm always afraid of that. This is the reason I ask most of the time after starting my stream. Please let me know that you can hear me or not. Okay. Please write it down. Just write it down. Sound is okay, or you can hear me or something. Can you hear me? I don't think so. Let me check one more time. Okay, so micro is okay. Brother, can't you hear me? If you can hear me, please let me know because otherwise to I have to restart something like that. Okay, can you hear me? Hey Amga, can you hear me, brother? The voice. Can you hear me? Yes, we can. Okay, Rakesh. Thanks, brother. Thanks for replying. I don't know why it took too long, but I think it's because of my delay or time lapse, something like that. I think that's the thing. Okay, I'm fine, brother. Okay, good morning and good afternoon at the same time. Uh, Open heart mystery. And Deepak, thank you, brother. Thanks for confirming that you guys can hear me. Thank you very much. So now I can go for the further price action. Okay. Now the first thing first, every day is not for trading. So don't think I have to take an entry every single day. If you think like that way, you will never be a winner, never be a consistent profitable trader. Okay. So you have to wait for the perfect price action. If you can get it, just jump for the trade. Otherwise, just wait. If you remember, this is the dollar index that was the breaker from 4-hour chart. That was the hourly fair value gap price rejected from there. Today, price opened here. It went higher. It came here one more time. Okay. Then it started to go lower. I would love to go to 15-minute chart. From 15-minute chart, you can see price is just over here. What do you see over here? Just look at this price action. It is very sloppy, right? Why we are getting this type of sloppy price action? That's a good question, right? The reason is we have a CPI in Thursday, so price has to make some kind of liquidity. If there is no liquidity, CPI what it will do? There is nothing to do. But I can see this relatively equal lows as my sell side liquidity. There is some buy side liquidity, though it is not important till now. I don't think so. This is gonna be the target. Instead of that, this sell side liquidity are much more, obvious. Now there is a 15-minute parallel gap. 15-minute candle, and this candle low and that candle high that has made a parallel gap from 15-minute chart. Okay, so I'm not going to mark the 15-minute parallel gap from here to here. I'm not going to do that. Now I can do that. There is nothing wrong with that. What you expectation New York session? New York session, I would love to see some kind of higher run, brother. Price should go high. That is my expectation from the New York session. I will talk about that. Okay. So I'm not going to mark that full full range. Why? Just let me actually mark the fair value one more time. When this candle happened, price came here. The consequent encroachment, it went higher. What is this? This is buy side imbalance, sell side inefficiency. Okay, so there is a imbalance from buy side, and there is some inefficiency for the sell side. Now I got the sell side over here until the consequent encroachment of this candle or this fair value gap. I got my sell side liquidity. Then the buy side liquidity, sell side liquidity, buy side liquidity, sell side liquidity. How many times price traded over there? How many times? Just a second. Thank you. Just a second. My mother just came. Something. I just one time on. Uh, Meet Amma. Now all is good. Thank you. Thanks for understanding me. Okay. Just my mother just came, so I'm sorry for the interruption. What I was talking over here, that price has delivered price until the consequent encroachment of this 50-minute fair value gap. So I'm not worrying about the upper 50-minute fair value gap, upper level of this 15-minute fair value gap. I don't care about that, not anymore. I would love to mark until that candle low, I mean the lowest candle body, to above that high swing high, above that swing high, specifically that swing high. Now you can tell me whether you can mark the candle low, I mean the week low. That means that you could mark that portion of this fair value gap, but I would love to mark until the body. Why? Because when this candle appeared, that there was some kind of sell side inefficiency. Now until here, sell side has been delivered, so I would love to mark the fair value gap for this portion. Okay. Now this is kind of little bit extra level of the fair value gap concept. I think you will understand this when I will keep talking about this again and again. Okay. So right now try to understand why I'm going to mark this portion of this fair value gap from the whole fair value gap. I am curious about this portion of this fair value gap because price has done its job over here. There is no space that is empty over here above the 50%. There is no portion that is empty. Okay. So I care about this fair value gap. I would love to see market will come and take this sell side liquidity because that is too clean from the 50-minute chart. You see this low, that low, those lows. Everything is perfectly aligned at the same place. So I am curious to see if market can take that sell side liquidity, then it will come to this fair value gap, the last portion or the lower portion of the 15-minute fair value gap. Now this is my fair value gap from 15-minute chart. I would love to see. Okay, I'm not going to see the consequent encroachment. Okay, so don't get me wrong. There is no consequent encroachment for that level. So this portion, I'm curious about that. I would love to see how price react to that portion. If it can come below this low after taking sell side liquidity, if it can go above this portion of the fair value gap one more time, that means the body close above that high, I would love to see some kind of buy side taken. But if I see price came below, take the sell side liquidity, body will close below those level, I mean below this level, body will close there, and then some kind of, I mean retracement can happen, but body can't close above that high. It has to go through this fair value gap. If it happened, then I would love to go for the sell side liquidity from here. This low, that low, those lows, all of them are actually relatively equal lows. So I will go over there. Right now, I'm thinking price will come over here. I would love to go 1 minute chart, though I don't come over here for the dollar index, but I would love to come over here for one time. Okay. Now look over here, the price action from the 1 minute chart. Okay. This is the lowest low. I mean, as this is the sell side liquidity, so just to remember, this is the lowest low, price came here, so this is the price leg. All of this price action are inside this price leg. Okay. Now I'm not going to describe about, I mean I'm not going to talk about the PD array or premium and discount array. All I'm going to talk about is fair value gap. Why fair value gap? Because fair value gap concept helps me to determine where price is going. That is why I always talk about the fair value gap. So from here to here, inside this leg, all of this price action are inside this leg. So you have sell side liquidity over here, you have buy side liquidity over there. Where price came? It came to this parabolic gap. Look at this parabolic. What is this? This is the last parabolic gap. The price came here. When it came, now it failed to come here. First, it has traded this order block. Then later, it came to this parabolic gap over here, or one more, or so many times it came to this parabolic gap. Okay, exactly to this parabolic gap. Now, when this time price came here, what it has done? First, it came here. It went higher, failed to take the buy side liquidity. It went lower one more time, made relatively equal lows. So that low and that low, they had made the relatively equal lows. See, before these two lows, there was no sell side liquidity. Price just came. When price was coming here, you had no chance to take your sell from dollar index. I'm talking about dollar index. You have to think this toward your Nasdaq, even S&P, or the any kind of forex market. Okay, when prices inside this leg, price started to go lower. When it started to go lower, do you have any sell side liquidity inside this price leg? No, I don't see any liquidity inside this price leg. Now, this is the extreme liquidity. Okay, I'm not talking about this liquidity. In a long run, I will go for that. And this liquidity is actually from 15-minute chart. I'm talking about from 1-minute chart. Is there any sell side liquidity? No, there was no sell side liquidity. So price is coming lower. What will you do? You will just watch the price where it is heading. You can mark some level, maybe this parabolic gap, maybe water block, maybe this parabolic gap, maybe this water block, anything, whatever you want. Maybe this, the inversion parabolic gap. You can mark this inversion parabolic gap as well. It's up to you. You have to read the price. This is the way you will read the price. Price came here to a random level. Okay, I will say this is order block, but I would never expect that it will come to this order block. Either it will come to this volume balance or this parabolic, but it came to this order block. But I am not going to argue with the market. Then it started to go higher. Okay, when it started to go higher, see, there was a very big run, very nice run, and also a parabolic gap, maybe 1 2 3, some kind of parabolic gap. Are you willing to take your buy over there, and your target will be that buy side liquidity? When price started to go higher, you have a very clean buy side liquidity. Look at this buy side liquidity. Now, this is your extreme buy side liquidity, though this is your extreme buy side liquidity, but price is going higher. So there is much more possibility that this is the retracement. Now price is going to take that buy side liquidity. Are you willing to take that buy side that entry? You shouldn't. Why? Because price came here, but it didn't take any liquidity. You can say, brother, this is my liquidity. No, this is just a price run. Now, as it is like looks like a swing low, please don't go for that. In a short period of time, you will understand when you have a bias. You have a bias, lower bias. Okay, you are expecting price will go lower. You are not going to mark those as your liquidity taken. You will wait for the perfect liquidity taken. Sorry. So this is not my liquidity taken. I will wait. I'm not interested to take my buy over there. Price went higher. I'm expecting price will go through this buy side liquidity. That is my expectation, brother. I'm just talking my expectation and what price did over here, and when price has done this, what should be my another expectation. So price came here, retraced to this parallel gap. It started to go higher. I'm expecting price is going to take that buy side liquidity. That is very clean buy side liquidity. Price failed to take that buy side liquidity. Instead of that, what it has done, it has made that buy side liquidity more stronger. That means in a short period of time or long period of time, that buy side liquidity has to be taken. That liquidity is now more obvious. Here, the price action, the buy side liquidity was obvious, but when this swing high has made, this is more obvious. Now, 99.99% chance price is going to take that buy side liquidity. Okay, so you have to think that way. Price came here, failed to take that buy side liquidity. What should you expect? It will retrace little bit. Maybe it will take that swing low. Okay, not this swing low. Maybe it will take that swing low, then it will take that buy side liquidity. You are just expecting. If your expectation works, you will go for the trade. If it doesn't work, you will do nothing. It went lower, it came below that low, so my sell side liquidity has taken. Now what I'm waiting for, I'm waiting for some kind of market structure shift. Do you see any market structure shift over here? There is no market structure shift. I'm just giving you the example from dollar index. It's because I don't go to my chart and find out something, then give you the example. I don't do that. I just give you the live price action. I try to give you the example from the live price action. Now I'm just telling you the way I read the price. Now, if you are hurried to take your entry, you feel free to leave my stream and please go and take your entry, because I'm not going to take my entry until 10, or I'm not even interested to take any kind of entry until 10, because I saw a very big run from the London session or overnight run. So after 9:30 there will be some kind of manipulation first, and this manipulation will stay, I believe it will stay until 10. So there will be some kind of choppiness. Price will take the buy side, it will take the sell side. That is my belief. Okay, I'm not telling it is going to happen, but that is my belief. Most of the time it happened. Okay, so I'm not interested to take my I mean to do anything over there. But if you trade the real money or something, please leave this conversation and do your trade. Okay, so when price came here, failed to take that buy side liquid, it went lower, it has taken this swing low. I'm waiting for market structure shift, but market didn't give me the market structure shift. Instead of that, it came here. Now it has taken that sell side liquidity, but look what is this. How many times I talk about this. This is the shallow run. Okay, whenever you will see this type of shallow run, you will go for that low as your liquidity, because now it is one low. That is why I'm not telling you that this is the more obvious, but if there was 2 3 lows, then that would be more obvious. But when this shallow run happened, it is kind of this type of things. Okay, more stronger sell side liquidity. When price came here and made this liquidity, now just think, you got a market structure shift over here, a perfect market structure shift over here. Are you willing to take your buy? I'm not. Why? Because this is 1 minute chart, and from 1 minute chart I got this liquidity. So I will wait that market will take that liquidity first. If it can take that liquidity, then I will be interested to take my entry. Okay, this should be your expectation from lower time frame. I'm telling you again, this is the way I read the price. Okay, so it has, when it has made this setup, or I mean the this price action, the sell side liquidity, it went higher, little bit higher, then it has taken this sell side liquidity. Now after taken, I mean after this sell side liquidity has taken, I would love to see a setup over here at this area, not this big run. Why not this big run? Because price has taken this sell side liquidity first. Okay, it has taken this sell side liquidity. Now there could be two things. It could make relatively equal lows instead of taking the sell side liquidity, but it didn't take the sell side liquidity. Instead of that, I mean it didn't make the sell side liquidity. Instead of that, it has taken the sell side liquidity and made relatively equal lows. Price has taken the sell side liquidity, it should give you a setup over here. Now if it can give you a setup over here, are you willing to take your buy? If you would love to take your buy, your target should be here, not here. Why? Because this is your extreme liquidity. You have to find out some low liquidity level first. If there is any low liquidity level, you should go for that entry. If there is no low liquidity level means the liquidity from 1 minute chart. This is the extreme one. Okay, though there is no buy side liquidity from 15-minute chart, I showed you before starting my streaming. There is no buy side liquidity, but from 1 minute chart that is liquidity. But at the same time, this is the extreme one. Like here, this is the extreme one. When you will see the 15-minute liquidity level, you will obviously get that liquidity level from 1 minute chart as well. Okay, but you need some kind of high time frame liquidity first. So if you'd love to take your entry over here, if you can get a setup over here, only here is your liquidity. I mean relatively equal highs. So that run is valid. If you take 2 3 contracts, then you can take your partial over there. You can hold it until here. If you take one contract, you have to close it over there. This is the rules. If you expect after taking this sell side liquidity, market is going to take that extreme buy side liquidity, you will take a losing entry most of the time, brother. Trust me. And it is called greedy. Now, most, I mean, some other people will show you how it worked perfectly, like the big trader. I saw their live streaming, but I'm not going with them. Okay, I want to see something that happened again and again, and I don't like to take my losing entry. I always try to take profit from the market. Okay? I hate losing entry. Market has taken this sell side liquidity, it went higher. When it went higher, I'm not thinking this is the market structure shift. I'm not thinking like that way, because this was my only liquidity level. Okay, now if that high and there was another high, just think, I'm just giving you the example. Just think, there is another high over there. There is two high that has made that buy side liquidity over here below this extreme one. Let me actually mark it. Just think like this way. Okay. So there is another high. So this is your another buy side liquidity level from there, and you got this market structure shift. I will go for that trade. I will go for that. Okay. I will leave this parallel gap because this is at the level of the liquidity. I will go. This is my first parallel gap. This is my breakaway gap. I will take my entry over there. I will hold it until here. If I have I mean, more than one contract, then I will take my partial over there. I will close my trade over there. If one contract, then I will go until there. As I don't have any other buy side liquidity below the extreme one, I repeat the same thing again and again. Below the extreme one, if you don't see any other liquidity level, there shouldn't be a trade. There shouldn't be a trade. Okay. So this level, when this buy side has taken, I'm not thinking this is my market structure shift. Instead of that, I'm thinking this has taken the buy side liquidity. Okay. When it has taken the buy side liquidity, where did it came? To this parallel gap. Now this is my inversion parallel gap. I talked about this, how I marked my inversion parallel gap, because that swing high failed to take the highest swing high. When this thing happened, this parallel gap is my inversion parallel gap. Okay, so this is my inversion parallel gap. Now I'm expecting some kind of lower run. Why am I going for this low, this extreme low? No, I'm not looking for that. I'm thinking price will expand lower. How long it can come over here? I don't have any liquidity level. Okay, there is no this leg. Let me actually mark it. Okay. This price action we don't have this price action. Price came to this inversion fair value gap. I'm not thinking price is going to take that high. If it take that high, there is much more possibility market will go over there. I'm not looking for any buy setup right now. I'm expecting some kind of sell setup. Okay, and this price action didn't happen yet. Now what I'm doing, do I have any sell side? When this, I have only this low, I don't have any sell side. Am I interested to take my sell over there? No, I'm not interested to take my sell over here. But brother, it has traded your inversion fabric of sell. So why you are not going to take, I mean, take your entry? If you just avoid your entry like that way, you won't be able to take your entry, never ever. Okay, let's see if I can find a entry setup just following the rules I am telling you from the beginning. Okay, so when it comes to this inversion fair value gap, it started to go lower. I'm happy. I'm expecting either price will take this sell side liquidity, or it will make some kind of, I mean, liquidity level that I will target. Now I have all the price action I have been reading from very beginning. From here, I am just reading what price is doing. This is the first time I'm getting confidence that market is going to take the liquidity level. Okay, before starting this streaming, I told you that I would love to see market will take this sell side liquidity, then I will see what price will do over here to the 15-minute fair value gap. Okay, now how I come to this conclusion? It came to this 15-minute fair value gap. What it has done? High, low, higher, high. Now it is not a perfect higher high, I know. Even it is relatively equal highs, but in dollar index actually we don't get some kind of perfect price action. But I can see, I mean, if you are not interested to mark this as your breaker, that's cool. You can mark it, I mean, mark the fair value gap over here. or the order block over here, whatever you want to mark you can mark, but I will go for the breaker. I will talk about fair value gap, order block, breaker, all of those level. Okay, but just think, I will say this is my breaker. I will say this whole consecutive candles are my breaker. Okay, and I will think like that way because this is a dollar index. Okay, so price started to go lower. Where did it came? Let's see where did it came. It came here. Now this is shallow run. I told you this is the shallow run. Very little shallow run. I will just mark the low. Okay. Now, when price came here, started to go higher, what should you look for? Are you going to take your entry over there to this fair value gap and your target will be here? No, you are not going to do that. What? Why you are not going to do that? Because you have seen price came to this level. This was your first chance to take your entry. But why didn't you take your entry? Now, you are not interested to take your entry depending on that inversion fair value gap. No problem. There is a fair value gap as well. If you would love to mark your fair value gap, you are free to fly. Okay. So I'm just explaining my understanding. You will think like the way you see the price. But if you are confused, you have to ask me the question and I will read your comment. Just let me finish this first. Okay. So when price started to go higher, I would love to mark this breaker. I mean, just let me mark it. I mean, just let me mark the last one because that's enough, I think. So that is my breaker. If you are not interested to mark the breaker, and I mean, if you're confused that no, brother, I don't mark the breaker, you can mark this fair value gap. If you are not interested to mark the fair value gap, if you think no, brother, I don't trade depending on the fair value gap, I trade depending on the order block. Okay, that is your order block level. And is there any other level? I have no idea, is there any other level or not? Okay, so whatever, when price come here, you will take your sell over there. You are more confident now. Where will be your, I mean, stop loss? Market over here, where will be stop loss? Just above that swing high. Now if I trade depending on my breaker, I will put my stop loss over there. If you would love to put your stop loss above the candle high which has made the fair value gap, it's up to you. If you would love to take your entry depending on the order block, you can mark the mean threshold. Then you can put your stop loss above that mean threshold. Wherever you want to put your stop loss, it's up to you. That is your money management, and that will be my target. If I have more than one contract, I will hold it until here, but I have to take my partial over there. And when I will take my partial, my stop loss has to be to the break even. It has to be into the, I mean, at the level of the break even. Okay, now it's up to you. If you would love to hold it until here after taking the partial, I'm not argue with you. Okay, now this is the place where you will take your entry. Now is this entry valid? Is this entry valid? When I was talking over here, I wasn't interested to take my buy. Why? I didn't see any buy side liquidity below the extreme one. Okay, no problem. When price started to go lower, I wasn't interested to take sell. Why? I didn't see any sell side liquidity above the extreme sell side liquidity one. Price came here, it came here, it went higher. No buy side liquidity except this little buy side liquidity, but there was no market structure shift. So this entry is not valid. Now you can tell me, brother, that is turtle soup entry. I have no idea how to take the turtle soup entry because I don't have that much experience. I think I need at least 15 years. I will need at least 15 years to take the turtle soup entry. Okay, so I'm not confident to take my I mean turtle soup entry. So there was a little buy side liquidity, but there wasn't any setup. I mean, I don't see any setup. Press come here to this inversion fair value gap. I'm not interested to take my sell. Why? I don't have any sell side level above that extreme one. Over when price come here, it has made this sell side liquidity. Now I have extreme sell side liquidity level. I have lower, I mean above the extreme one. I have 1 minute lower time frame liquidity level. I have some level or some place. If you see our well-known setup, I mean two fair value gap one above another. I am telling you again and again, brother, this is dollar index, so we are not expecting some kind of perfect price action over here. But if you see another fair value gap over here, not this one, because that is very near to your liquidity level. Okay, so look, if you take your entry over there, that will be your target. So that is a very small range. You are not willing to take your entry over there. If price come here and then it went lower, just sacrifice the trade. Okay, you have nothing to do over there. If you just take your entry over there, that should be your range. And I don't believe that. Now, when price came here, look, I have a liquidity level over here. See, this high, that high, they are relatively equal highs. Now, if you get a setup over here, it was very near to the sell side liquidity. I don't care. It has taken this sell side liquidity level. All of the sell side liquidity level it has taken. If you get a market structure sheet over there, a fair value gap over there, until that range, this range, the entry is valid. It is valid, perfectly valid. Why? Market has made the relatively equal highs over there. The same thing, it has made relatively equal lows. And I have the fair value gap, whatever I have over there, I have a entry setup over there. I will go for there, and later maybe I will trial my stop loss and I will be stopped out at some kind of level over here after taking the partial. Okay. Why I was talking about this? I will go to Nasdaq now. Okay, before going the Nasdaq, I would love to read your comment. And now this is the time. Please let me know that is this a boring lecture or do you think it is insightful? Okay, if it is insightful, then I will talk about the Nasdaq because one of my brother he asked me a question and that question has made my day. Okay, to be honest, that question has made my day. I loved him. I loved him so much because he asked a question I wanted to I wanted to be asked. Okay, so I will talk about the price action over here. Okay, let's see what actually done. I mean, what mess? How are you doing, brother? Hey, Stephen, how are you, brother? I'm little okay. I'm little bad. I'm in fever and streaming, so I'm both of them. Okay, and the thing is, guys, I would love to say that please, this is a request. Please give me a like. Okay, now I'm asking like because if you give me a like, it helps the YouTube algorithm something, and much more people will will get the information about my streaming. So that is why I'm just asking what to say, the like from all of you guys. That's the thing. Okay, uh participant mode, I would love to mark it as subscriber. Okay. So I don't want to listen the question from some people who are not with me for so long. Okay, otherwise they will ask some question I answered every single time. That is why I just marked it as only the subscriber. Okay, whatever. Please don't forget to give me the like. Okay, and Mayank Singh, hi bro, I saw your GBP analysis video. I noticed when you got in 15-minute time frame you marked the last fair value gap. My question is why you marked that last fair value gap? There was more fair value gaps above that. I don't remember about that, brother Mank, but I will go to GBPUSD one more time. So remind me, okay? When I will finish with Nasdaq, remind me about the GBPUSD. Remy, hi, how are you, brother? Remy, how are you, brother? Hey, Neuroy, how are you? Didaf, hello, brother. Ravi, hey, how are you, brother? Always insightful. Thank you, brother. Thank you. Stephen, hey, bro. You send me a like. Thank you very much. I can see there is more than 30 people, but I got 17 likes. So more than 14 people didn't give me the like. So they don't like my shit. Okay, that's cool. No problem. Okay, if you think it's a little helpful, then please give me the like. Okay, I just ask you a like, nothing else. So when it is insightful, then I can continue with the Nasdaq. So this is the 15-minute chart from the Nasdaq. That was the last 15-minute fair value gap. Hey Rahul, how are you, brother? That is another last fair value gap from the 15-minute chart. I have marked both of those fair value gap because these two fair value gap is inversion fair value gap according to me. Okay, according to my thinking, according to my everything, these two fair value gap has value. Okay, now there is so many other fair value gap, so many fair value gap, but why I'm mark I'm how I mean filter the fair value gap. This is the way I filter the fair value gap. I go when price went through all of this price action, I will go with the last fair value gap only. Look at this run. From that run, I have marked the hourly fair value gap. If you tell me to mark the last 15-minute fair value gap, I can do that. But as the hourly fair value gap is much more precise, so I have marked the hourly fair value gap. Okay, when price came here, so I have marked the hourly fair value gap. When price went through this leg, there was a fair value gap from the 15-minute chart. If I mark that 15-minute chart, you will see the reaction from that last fair value gap from the 15-minute. Okay, let me actually show it to you. Otherwise, you will be confused. You will think this guy just blah 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 blah. Okay, just let me mark from here because above there it's not. This is the last 15-minute fair value gap. Okay, if I mark much more lower, that is the same thing. But I will stay over here. Can you see the reaction from the last 15-minute fair value gap? Okay, this is the reaction from the last 15-minute fair value gap. I mean a swing high, a very clean swing high. This is the last fair value gap from 15-minute chart or the hourly chart, whatever you would love to say. But if you mark the 15-minute chart, you will see the reaction from the 15-minute chart. This is the reaction from 15-minute chart. As price went through this, I am going to remove this one. Here, this is also the 15-minute fair value gap, and this is also the last fair value gap from the 15-minute chart to that leg. Okay, when price is coming from here to here, it is going lower. So this is the last fair value gap. When price is coming, I mean, it will go back. It is the last fair value gap. When price is coming lower again, this is also the last fair value gap. Now, when price will come here, I will mark the last fair value gap from there to this specific leg. To this specific leg. So price is so far from the last fair value gap. I am not willing to mark this fair value gap right now. Instead of that, I am willing to mark that fair value gap to that leg. I mean this specific leg below that 15-minute fair value gap. I have this last 15-minute fair value gap. So I have this three level to my chart. This is the first thing. Okay, so don't forget about this 15-minute fair value gap. This is the inversion fair value gap as well. According to me, I'm not telling you to go with that, but that is the inversion fair value gap according to me. Now here is the 1 minute time frame. Okay, at the morning session beforehand, I mean before the New York session opening, I think price was somewhere here. I don't remember exactly. I mean price was maybe somewhere here. Okay, so I told that mark that buy side liquidity. I have this clean buy side liquidity, that high and that high, they're relatively equal highs. I have this buy side liquidity, that high, that high, that high. All of these highs are made the relatively equal highs. So all of these are buy side liquidity, but that is more clean, that is more obvious. That's why I have marked that highs as my buy side liquidity. Okay. Now when price is started to go lower, I told you to mark this 15-minute fair value gap. Now from 15-minute chart, I would love to show it to you. Okay, why I showed you that I'm willing to take my, I mean I'm reading price over here. Okay? Price went through the 15-minute fair value gap and very sudden, very near, it went back again inside the fair value gap. What is this? Fake breakout. Now I'm also confused about the fake breakout. That's why I don't go with the fake breakout. Whatever, let it go. I told you beforehand, if you ever see a big run overnight, okay, this is the run from overnight. Price is falling, 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 falling. It is just falling. See, from here, it is just falling. If you ever see that type of big run, wait for 9:30. You will see the manipulation will happen from 9:30, I believe, until 10. Until 10, you will see the manipulation. You are not going to look for any kind of setup over there. Every single people who will open the chart at 9:30 from the Wall Street, they will see prices falling. Let me show it to you. Regular trading hour, okay. So over here, see, they have opened the chart and they are seeing prices here, prices now here. What does it mean? That means price is going lower. Price is going lower. Take sell, take sell, take sell, take sell. Everyone is started to take sell. When they take sell, they started to see prices going higher. Suddenly they will change their direction. and they will start to take buy. When they will start to take buy, now they are much more experienced than us, but I'm just telling you the fact. Okay, the fact, the way they think the price will work. They even don't trade 1 minute chart. Trust me, brother. They trade daily chart, hourly chart, more than 4 hourly chart, I think. So I'm just talking about the fact over here. They will take buy, market will stop them out. They will take sell, market will stop them out. So all of the manipulation will happen. If you ever see this type of big run overnight, wait until 10. Don't take your decision until 10. If you miss the move, don't be frustrated, because if you miss the move for 1 day, you will avoid the losing entry for thousands of the days. Trust me, brother. Just don't trust me blindly. You write it down and you observe the price if you ever see this type of things. But I will show it to you. Don't worry. So price came here. It went back again the last 15-minute travel gap. Okay. When it come over here, this price action. Do you remember yesterday I told you you don't need to think about this price action. What is this price action? It went below the 15-minute travel gap. What does it mean? That means I don't care about the 15-minute travel gap. Okay, I don't need to think about this 15-minute, the travel gap below the 15-minute travel gap. So I am not worrying about that. I got this travel gap, so I would love to take my entry to that travel gap. Where should be my target? That should be my target. Why this one? Previously I told you that, brother, I'm going for the lower time frame liquidity when I will have the extreme one. Now here is your extreme one. No, brother, this is not my extreme liquidity. I have some other level over here. See, all of this liquidity, this high, that high, they are relatively equal highs. There is relatively equal highs. There is relatively equal highs. Here I have relatively equal highs. That high, that high, they are relatively equal highs. So those are my extreme liquidity levels. See, this is the clean buy side liquidity. That high, that high, that high, that has made clean extreme buy side liquidity. So this is not my extreme buy side liquidity. I told you I'm going to take my entry over there. Not going to take my entry. I am going to read the price over here. What does it mean? That means I'm expecting if price can come here and then it can deliver the price until this buy side liquidity, then I will get a level. I will get a level that, okay, price has started to respect my expectation. I should go for trade before 9:30. I should go for a trade. Now what price has done? It came here. It again came to the constant encroachment of the last 15-minute fair value gap. It went higher. It has taken, look over here. Let me check market. Sell side liquidity, market structure shift, fair value gap. Took your entry. If you miss, if you are not confident about that market structure shift, you can go for that one. That market structure shift. You should take your entry over there. There should be your target. I'm sorry, brother. I'm I'm to be honest, I'm very sick. So you should go toward that buy side liquidity. Now, if you are already take your entry over here, you should take your partial when price will be above that high. I could tell that price when price will go above that high or that high, I'm going to take my partial. No, I'm not going to take my partial. Okay. Now I did this beforehand. I have just do this thing beforehand when price even didn't deliver. Then I could easily tell you, brother, it went higher that high, so I have taken my first partial. I had take that entry and that was my first partial. If I would do that, how many handle was there? There was near about 14 handle. Not bad. And then I could tell you that I would put my stop loss to the break even. So I got stopped out to my break even. Oh, I'm not going to do that, because if I do that, you will think like that way. This high is not important at all. This high is important for taking your partial. Now you can tell me, but brother, you are wrong, because you see, price just take that high. It didn't even take that high. Instead of that, it went lower. Now why this high is important for taking partial, not that high? When this buy side liquidity has made, price went higher. it has taken the sell side liquidity market, maybe some kind of market strategy, whatever, traded this fair value gap, started to go higher. Where did it came? It was very near to the buy side liquidity. Now it is very, you can see this is too far, but in my opinion, from 1 minute chart, that was very near to that buy side liquidity. Okay, because this is the perfect swing high. There is no other swing high that is more perfect that than that. I mean, then there is no other swing high that is more perfect comparing with that swing high or that week. So this high has made those highs more stronger. Now, if I would love to take my buy, when price will go at the level of that high, or maybe little bit lower than that high, maybe one ticks lower than that high, that should be your partial level. This high, that high, I don't care about them. This is just a swing. This is just little swing, retrace swing, retrace swing. It is not important at all. Here, why you are not going to take your buy? The reason is, this is, price is just falling, right? It is just falling, falling, falling. Now, first time it is started to go higher. How do you know it is not the retracement? How do you know that? I don't know. It can be a retracement. Okay. Now, when it is the retracement, I mean, I don't know this will be the retracement. So I am reading price. Now I show you the setup so that you can understand what I'm expecting now. If it can deliver the buy side liquidity taken, then I would be sure, okay, this is the time, brother. Let's go. Let's go and chill. Okay. Now it didn't do that, okay? Instead of that, what it has done? One of my brother, he asked me, why didn't you take sell? See, price has made this relatively equal highs. Okay. After shifting market structure, prices made this relatively equal highs. It has traded this fair value gap, has taken the buy side liquidity, went lower, gave me another market structure shift, this volume balance. Maybe there is any break or anything, whatever it is. It came here, broke lower. Boom. It broke lower. Now, he told me, he asked me, why didn't you interested to take sell? The reason is, I don't see any sell side liquidity here, brother. I have buy side liquidity. So I will read the price over here. If I see the perfect deliver, at the meantime, if I see it is willing to go higher, then I will be interested to take my entry. I will sacrifice one entry. Why? Because I want to see first that market is actually respecting my expectation. Okay. What was your, please analyze Euro USD. Jeffrey, I need to finish this first, brother. So either you have to wait or you have to leave. I'm sorry, brother, but I have to finish this first. Okay. Love from India, brother. Love from Bangladesh, brother. New right. This area retracement 0.618. That's good. That's good, brother. Standard deviation. Okay. How long is the delay? I think 10 minutes, something like that, brother. 10-minute delay, Kevin. I'm trying, brother. I'm just trying, but I'm in Bangladesh, so I'm unable to recharge through my Bangladeshi credit card. That is why I am not even able to take my entry to my top step account. Okay, so I am just like a blind guy right now. But I'm trying my level best to buy the plan. I have no idea what I will do, but I need some more time. I hope very soon I will get the plan. Okay, I'm sorry for that. Premium area, new right. Thank you, brother. Thanks for confirming that. I didn't know that it is at the premium area. Okay, that can be the premium area and 618 level. That's cool, brother. Whatever. So price has come over here. It has taken that buy side liquidity from there. Okay. Now when it started to go lower, do you see any sell side liquidity? Obviously, brother, there is a swing low, there is a swing low, there is a swing low. That is my sell side liquidity. I am not going for them. This is not my sell side liquidity. I always go for relatively equal highs or relatively equal lows. If I don't see that, I'm not interested to take my entry. Either you have to have some kind of obvious relatively equal lows or highs, or you have some kind of fair value gap from the 15-minute chart that is more obvious, like over here. This fair value gap price can come over here, okay, but though this is not more obvious, but that type of thing, okay, like this fair value gap was over here when price was over here. So this type of things I will tell you, or if you ask me, I will tell you that always go for the relatively equal highs and relatively equal lows, because price will never fail you over there. Never, okay. There's nothing called never in trading. So I will tell 90% of the time you will be right, okay. So I saw this setup. It has taken that buy side liquidity, then very energetic run, price come over here, started to go lower. There was another chance over here if anybody missed their entry over there. So it was also the trend is your friend, okay, that type of things. It was also that type of things. So if you missed all of this entry over here, there was another chance over here when price break through this 15-minute fair value gap one more time. This was your confirmation that market is going to take, I mean, going to go lower. Though I saw this as a fake breakout, and that is why I was expecting some kind of buy side or the buy setup. It failed. When it failed, it stopped me out. If you took that entry, there was some level like this fair value gap, then finally this order block and this swing low. When this swing low is broken, specifically this swing low, when this swing low is broken, market has shifted lower side, to the lower side, okay. It has already shifted. Now I could take my entry over here, here, here. If I missed all of those, when this candle break this last 15-minute fair value gap with a very strong look at this two candle, it is very strong, okay. Then price came back again to this fair value gap. That is also a level where you could take your sell, if only if you could see very clean sales and liquidity over here. Do you see any sales and liquidity over here? And now I have sales and liquidity. I'm not telling I don't have. I have this sales and liquidity level. They're more cleaner. I believe they're going to take, they will be taken. But before this run, there was no sell side liquidity. That is why I wasn't interested to take my sell. I was interested to take my buy. Why? Because I had the buy side liquidity. Price came through this. This is the 930. Price went. Where did it came? It it's perfectly fake breakout. Okay. I don't know what happened because I'm 10-minute delayed. But if you ask me, this is the fake breakout. I got the, I mean, the consequent encroachment rejection. Price come back again to the low. I would love to take my sell over there. My stop loss will be just above this high. Why this high? Not why not that high? The reason is this is the, I mean, I told you you have to put a stop loss when you will see the consequent, I mean, consequent encroachment rejection. You will put your stop loss above the highest high. Now the highest high is already outside of the last 50-minute fair value gap, so there is no need to put your stop loss over there. You can just put it above the 15-minute fair value gap. That should be your target. This should be okay. I don't know what happened. Maybe, I mean, price went above one more time, because I told you that this is kind of manipulation phase. But if you ask me, there is 99.99% of chance that market will take the sell side liquidity first. After that, it can expand higher, okay. Now if any of you have the real data, can you confirm that it worked or not? Okay, just let me know that it worked or not. Just let me know that. Now when it came here, if you don't believe this setup, no problem. You gave your, I mean, you got your market structure shift over here. Just let me remove it. This is all risky, okay. Nothing is for sure. This is your market structure shift, and there is your fair value gap. So you have to take your sell over there, over here. Your stop loss will be here, and that should be your target. That should be your target, okay. That should be your entry if you want to take this entry. But this is highly risky because of the run you got from the overnight, okay. For NQ, I told that this is the manipulation day, so I am expecting some kind of higher run now. I'm not interested to take some kind of lower run. I would love to see the higher run. Okay, that is my expectation from NQ or any other market, because dollar, from the dollar index, I'm expecting the lower run. Now, anybody has the, I mean, uh, the real data. If anybody has the real data, please let me know that uh, this level has taken or not. Okay, just let me know that. I would love to know that from you guys. I mean, this 16657.75, is it traded or not? You took that entry, how much? 21 handle, not bad. And there is your order block level. This is your order block. So this is your order block, and you have the mean threshold for here. So this is your mean threshold. Price should not close above that. If price closed above that mean threshold, there is much more possibility market is going higher. If price closed above that mean threshold, otherwise, until mean threshold will hold the price, there is much more possibility market is going to take that sell side liquidity. If body close above the mean threshold, there is much more possibility this buy side liquidity will be the target. That will be your target. No, it wasn't taken. Okay, that's cool, Remy. So it is what it is. You have to take the partial. There are so many chances. You, if you would love to take your partial, you have to take the partial over here. Think at that level, you have to take the partial over there. Then you have to put the, okay, that is the another thing. But wait until 10. Until 10, you are not looking for any type of entry. After 10, you will get the perfect setup. Trust me, brother. All of these things are actually manipulating. See what price is doing over here after 9:30. Okay, it has taken the buy side liquidity, it has taken the sell side liquidity. I believe it will take the buy side liquidity one more time. Then this type of thing will happen until 10. Do you get my point? I talked about this before. I didn't just watch the price and then didn't talk about this. Okay, I talked about this beforehand, that there's much more possibility that market will do this type of things. It will take sell side liquidity, it will take buy side liquidity, it will take again buy side liquidity, it will take sell side liquidity. That type of things will happen. Okay, if the body close above the mean threshold, there is 99% of the chance that market is going higher, and maybe this buy side liquidity will be the target. Okay. I think that's enough for one day. I was thinking that I will close my streaming within half an hour, but it's more than 1 hour, I think. So thanks everyone. If anybody has any question, you can ask me. Otherwise, I will just close the session. Okay? Don't don't take your decision over here right now. Don't take your decision. Look at the price action over here. Is it perfect? Do you see any perfect price action over here? I don't see. My GBPUSD. Okay. Can you tell me what should I talk about the GBPUSD? USD. What should we focus at time frame? Drawn liquidity or lot? You have to mark the high time frame drawn liquidity, and you have to go for, if you take your entry, you have to go for the lower time frame drawn liquidity. So prices over here, buy side liquidity over there. That is your buy side liquidity. Actually, let me uh, okay, prices over here right now. And if I will not, there is no fair look at from 15 here. Look at this 15-minute parallel gap. That is more obvious in my opinion right now. Okay, this is the last 15-minute parallel gap. If If price would love to go lower, that is the place where it should come. Okay, in a higher time base, I am expecting higher run. Market will take the buy side liquidity. It will come to this daily fair value gap at least. It will go over there. But when it is falling, there is more possibility that market is coming toward that 15-minute fair value gap. I don't understand why you marked the last fair value gap in 15-minute yesterday. Where was that? I mean, where was that? Here somewhere? And why you marked the last 15-minute fair value? Mark the last fair value gap in 15. I always mark the last 15-minute fair value gap. I mean, either the last fair value gap, if there is another fair value gap above that fair value gap, then that two fair value gap is important for me. Okay, the upper fair value gap is for entry, and the last 15-minute fair value gap for later use. This is the only true reason I mark the last 15-minute fair value gap. Or I don't know what should I answer. I mean, I always go for the last 15-minute fair value gap because that is easier for me to read the price. If it can hold the price, there is much more possibility market will go and take that buy side liquidity. If it failed to hold the price, there is much more possibility price will go lower and it will take that low. Maybe to the it will come to the consequent enforcement, and finally it will take the what to say, the sell side liquidity over there. I mean, this last 15-minute fair value gap actually determine everything. Okay? So look over here. If you see this run, okay, if you see this run, I'm going to mark the small liquidity. Okay, that is the last 15-minute fair value gap. I will go 1 minute chart now. I'm just giving you an example. Don't think this is perfect, or I really don't know it is perfect or not. Okay, now this is a kind of fake breakout. I don't go for that. But if you just skip this one, this fair value gap hold the price. This is the last fair value gap from the 15-minute chart. Now price came here because there was 1 minute fair value gap, the extreme fair value gap from the 1 minute chart as well. So that's maybe that is the reason price went over there. Now when price came here to this 15-minute fair value gap, now there's what to say, 99% of the chance that market is going to take that liquidity and it will go toward that 15-minute fair value gap. Look at this fair value gap from 1 minute chart. This is the last fair value gap. Price came here. The last fair value gap, it is reacting. I want to see it will go through this. Now think like that way. I have already taken the entry. Okay, it has taken the buy side liquidity. I got maybe market structure shift over here. Then I took my entry over there. Okay, think like that way. That I have taken my entry over there, and maybe I put my stop loss over here. I have targeted this low. Okay, that low. Just think like that way. I have targeted that. What should be my expectation? How I will mark the level over here? First, let me mark the entry level. So this fair value gap is my entry level. Price came to this fair value gap one time, two time, it went lower. When price went lower, look at that candle. Okay, now I'm not going to explain everything over here, but that is my order block. This is my order block level. I'm going to I mean extend it to the right hand side. Okay, that is my order block. Now order block start from here, from lower of the week. I love to mark it from the opening. I believe that is the retest of order block. I would love to mark, I mean, sorry, not the black one, the green one. Okay, so I'm sorry because the green one is the order block one. Okay, I would love to mark the mean threshold of this order block as well. So this is the mean threshold of the order block. This is the mean threshold of the order block. Not perfectly, but it is mean threshold, whatever. So I will see the price. If I see a body close above the mean threshold, I will try to close my, I'll try to kill my trade. Okay, I will try to kill it. If I see this mean, body can, the price can go above the mean threshold, it can come here as well. I don't care about that. All I care about the body. If I see body close at the level of mean threshold or below the mean threshold, I'm okay with that. Until body close above the mean threshold, I'm perfect. When it will be above the mean threshold, and if I'm trading to my live money, I'm going to kill my trade. Why? Because I see market came where? Where did it came? The last fair value gap from 1 minute chart. It is not useless, brother. The last fair value gap from every time frame is absolutely valuable. If you know or if you can understand how to use it, there will be nothing that can stop you. That will stop you. Trust me, brother. So price come to the last fair value gap. It can go above to retest the order block or the mean threshold, but it should hold the price and send it back toward that fair value gap. It should go through that fair value gap. If it can go through that fair value gap, this is the most obvious place where price will go. 99% of the time you will see market will take that sell side liquidity if the last fair value gap failed to hold the price. Now there is some other liquidity level, and let me actually mark the liquidity level. Look at this order block. There is a rejection block. All of this level are the liquidity level. Okay, don't ever think liquidity is always stay over here. When price will come over here, liquidity has already taken. When price will come here, liquidity has already taken. It price come here, liquidity taken. It doesn't need to come over here. If it can come over here, that is the extreme liquidity that has been taken. So this is the way, I mean, see, it retested the order block perfectly. I'm happy with that. And just see the price action over here. And until the body close above the mean threshold, I'm okay with the price action. I would love to see market will go through this fair value gap, and finally it will take that sell side liquidity if market would love to go lower. I will see the price action over here right now. Look at the price action over here. This is the slopiness. Who thinks this is the perfect price action? I don't think so. This is the perfect price action. It is actually taking buy side liquidity, it is taking sell side liquidity, it is willing to do the choppiness. Why we are seeing this type of choppiness? What is the reason? Let me go to 15-minute chart. Oh man, price was falling, falling, falling. It is just falling from the overnight. We got a very big run. That is the reason we are expecting this thing, this slopiness. And you have to avoid the slopiness. If you ever been into a slopiness, you will be chopped up and you will be frustrated. You will maybe you will have an heart attack. Okay, so be careful. Uh, don't forget to like, comment. Stephen, you weren't here, so nobody gave me the like. Okay, so now you are here. I'm happy because maybe I will get some likes over there. But it is what it is. People are so miser now these days. Okay, self-centered. They don't even want to give me the like. I'm not a popular like other people. That is the reason, maybe. That is why people even don't want to give me the like. Now, when min threshold failed, there is much more possibility market will take that buy side liquidity. Now, from 15-minute chart, I don't see any clean buy side liquidity, but from 1 minute chart, that was more obvious. I'm thinking that maybe market will take that buy side liquidity. I will think the price like that way. It has taken the buy side sell side liquidity, market structure shift. If price can come to this fair value gap, that is the perfect entry. If there is two fair value gap, I will enter to the first fair value gap. This is the setup, okay? And now if I were in the market, if there is a fair value gap, just think there is a fair value gap. That is my entry. If I were in the market, I would take this entry. Okay, I would take this entry. I would take my first entry to the first fair value gap. I would cover the breakaway gap. That would be my entry. Okay, and if it failed to come to this first fair value gap, no problem. I just missed the trade over here after this because I got the precision over here. It came here, it has taken the it let me to get the liquidity, at least partial. It let me take that. I sacrificed that entry. I didn't take that entry, so I sacrificed that entry. When price went above this mean threshold, the time, let me actually show it. The time it has closed above the mean threshold, where here, actually here. it closed above the min threshold. I got confident market is going to take that buy side liquidity. I got the confidence. Now it is I'm also I mean till now I'm 10-minute delay. Let me know that it has taken that buy side liquidity or not. Okay, and was there any setup or not? But if I were in the market, if even if I was to my live account, that would be my entry. If market can come to that level, that specific level, I'm in the market. Now I am 10-minute late, so I can easily tell you that brother, this is my this would be my entry, okay? But I'm blind. I don't know what happened. So this is the price action unknown to me, but maybe you already know that what happened over there, okay? I will cover the breakaway gap and I will take my entry over there. That will be my target. If market let me take that entry, I will be boom. Yes, the buy side liquidity was taken. Okay, Ravi. So I'm right? So beforehand, I told you, if I were in my live account, this is my entry. I got precision over here. Price, let me at least take the partial. I didn't take that entry, okay? I am talking about the, what to say, the, what to say, reading price. I was reading price over here. If I would take that entry, I wouldn't be successful or not, okay? I wouldn't be able to take at least a partial. So I'm right. Prices made that sell side liquidity much more stronger. The school, no problem. It went higher. Where should it come? At least to this mean threshold. It shouldn't break the mean threshold. It has broken the mean threshold, brother. When it has broken this mean threshold, this is the most obvious thing. Price is going to take that buy side liquidity. Now I have to wait for the setup. How can? Sell liquidity taken, brother, it is just a swing low. Why you are marking that as if sell liquidity taken? I'm going higher. I don't care about the perfect sell liquidity because that is not my target. If I go for the target, I will go for the perfect liquidity. But as I'm going toward that, I mean, this should be the equal highs or something like this, okay? Now I just need to mark some kind of liquidity has taken over there. Liquidity has taken. Market structure shift. I have two fair value gap. This is the first fair value gap. This is the last fair value gap. If price can come this level, this specific level, if it can come over here, I'm not hurry. Okay. When I see this run, price is going higher. I'm not hurry. I'm just waiting. If price can come here, I'll be in the market. That will be my target. Maybe little bit higher that buy side. Maybe little bit higher. Okay. But brother, you are going to miss that. It is not going to trade that fair value gap. So what I will miss that. One train will go, thousand another train will come. Take me. Don't worry. I saw the candle at 942 as MSS and NT1 parallel gap 957. Is it valid? 942 as 942, 942. Here. This one is your market structure shift. Then where did you say 942 and 957? So 957, I think this one. Yeah, if that is valid. That is not only valid, that is actually that is the entry. I mean that should be the entry because you already got the confirmation that market is going toward that. Yeah, so that should be the entry. I'm sorry for that. I didn't see the price. I was just talking. I told you, brother, when I am live, I can't read the price that much perfectly. Okay, but thank you, Remy. Thanks, brother. Actually, this is the entry. That should be the entry. Over there, my entry is not valid. This one is not valid. This is the perfect entry because market has taken more clear liquidity over here. And if you just mark, I mean you have to mark this one because this is not your market structure shift. This can't be your market structure shift because there was the min threshold. It didn't break even, I mean, until this candle the min threshold was holding the price. So when this candle happened, I got the market structure shift over there. So that is the first fair value gap, I mean the breakaway gap. That would be your breakaway gap, and this is your First variable gap. So this is very small. Let me actually mark it. Sorry. Okay. Now, do you want to learn the truth? If I would take that entry, I would be stopped out. At the first time, I would be stopped out over here. I mean, if I were trading, I would be stopped out over here. When price will come back again to this fair value gap, when this candle closed, I would be I would take another entry over there. My stop loss would be just below this gap. Look at this gap. This is the inversion fair value gap. My stop loss would be just below that inversion fair value gap. There would be my uh, stop loss, and that would be my target. So 42 handle. That would be huge, brother. That would be huge. But to be honest, if I were here alone, I would be stopped out for the first time. To be honest, I'm sorry. I'm not always right. Sometimes I also lose. Everybody lose. ICT also lose. Don't get me wrong. But it is what it is. Actually, I would take my entry to that fair value gap. Not I wouldn't wait until here. But I would cover my stop loss until here, because there was the order block level over here. Let me actually mark it. There is the order block level over here. This is the order block. But final, actually market came to the mean threshold. I believe it came to the mean threshold of the order block. Let me mark it. Yeah, perfectly it came to the mean threshold. Very perfectly. So I would be stopped out over here. That is the mean threshold of the order block. This is your order block. So I would cover the order block level, but I wouldn't cover the mean threshold, to be honest, because that would be much more bigger stop loss for me. So I wouldn't do that. Instead of that, I would be stopped out. Dada, you are very listen. No, man, you are very lagged. Okay, you are very lagged. Okay. I think this is because of my internet. I'm sorry, brother. This is silver bullet. Mm, yeah, this is silver bullet as well. Brother, what do you mean by silver bullet? Can you explain that? I mean, silver bullet time zone is 10 to 11. But can we explain why this one is silver bullet? Now, if I go to E-mini S&P, just let me go over there. Julian, is it okay now? I mean, the setup, I mean the internet. I mean, I think this is because of my internet. Okay, this is because of my internet. I think so. Okay, so this is E-mini S&P. Okay, I would love to mark the setup over here. I hope you will be agree with me. So in my opinion, it has taken the sell side liquidity over here. This is the liquidity taken, and the market structure shift. If you mark, where is the market structure shift? Where is your market structure shift? So that is, I can only say this is my market structure shift. Okay, it never came to this fair value gap. So I missed the silver bullet entry for the I mean the E-mini S&P, right? If you mark this one as your social liquidity, after that this would be your market structure. Don't tell me that this is your market structure shift, because that is relatively equal highs, not a swing high. So that shouldn't be your market structure shift. So you can't say this is your market structure shift. I can say only this is your market structure shift. Till now I didn't get the silver bullet entry for the E-mini S&P. What do you think? I mean, actually what do you say about the market silver bullet entry? I would love to know about that, brother. I mean, in your chart, you were 10-minute delayed unless I'm from the future. I'm 10-minute delayed, Julian. To be honest, brother, I'm 10-minute delayed. See the delay button over here? Data is delayed. Okay, so 10 minutes because of exchange requirements to get a real-time data for Chicago Mental Exchange Forex is buy the real-time data package. Okay, but I'm not able to buy it because of the Bangladeshi bank credit card they don't allow to pay money to, I mean, outside of Bangladesh. Okay, they don't allow it. So I'm not able to recharge it or buying the new data plan. I had bought it for 1 year, but I mean 6 months. It has finished, and now I am just helpless. Okay, but I just communicate with some of my friends. The reason is everyone is too busy, and I feel shame to ask help from my friends more than once. That is the reason I'm just I'm just doing these things. Okay, no, you're not from you are not from future, brother. Okay, dread of this is obviously the silver bullet, but in if you ask me, I for me silver bullet entry is too difficult because if you would love to trade silver bullet, you have to understand so many things. The first thing is market maker X model. You have to understand that perfectly. That is too hard. I mean, whoever tell you that market maker X model is too easy, I'm not agree with him. Maybe that is easy for him because he understand that perfectly, but he can't say this is easy. Okay, so I always go for the easiest one, but that's all. Okay, I mean, so I think that's enough for today, and I have already covered the GBPUSD as well. Let me go over there one more time. And anybody has any more question? I'm extremely sorry. I told you that I will complete. I mean, I will finish this very soon, but till now, see this last 15-minute travel gap is holding the price. It is holding the price. That is the bad thing. Yesterday I have uploaded a video about the GBPUSD, and I told you that it is holding the price. That is not good. Then I got stopped out. Though I got stopped out because of a spread, I put my stop loss at the level where price shouldn't go. Price never went over there, but because of the spread, I got stopped out. Now over here, price is actually holding the price. I don't want to see that. You have to take your partial. If you take that entry, you have to take your partial to that specific level. Then you can let go the other portion of your entry to toward that low. Okay, if this thing failed to hold the price, this is the most obvious level where price should come. This 15-minute parallel gap is the most obvious level where price should come. Okay, now if it can go through all of this area one more time with a base, I mean energetic run, it will come toward that buy side liquidity. Though I don't think so it will happen until it will reach over there. In Nasdaq, I told you that I'm expecting some kind of higher run, I mean bullish run. I got it. I mean, it has taken a very clean bicep. Now, what I told you, brother, I always look for some kind of liquidity that is more obvious. Look that those highs, okay? There are so many swing highs over here, where over here. Can you see where price started to consolidate? What is the level? That too high. Price can take that high, I mean that specific high. After that, it can start to do this type of things. It didn't do that. It just take that relatively equal highs, started to do this thing. Do you understand why equal highs, equal lows are more important comparing swing high, PM session high, yesterday high, or any type of high? I go for this type of things. Okay. Now I got the markets. I mean, liquid buy side liquidity taken. Now, if it will have to go lower toward that sell side liquidity, I'm okay with that. But I want to see some kind of sell side. It will keep open over here for CPI, because today and tomorrow market has the chance to make the liquidity for CPI. Okay, so I really would love to see some kind of liquidity that should be kept open. Okay, it should kept open over here. Let's see how price worked over there. We will see that. Okay, to lesson, if parabol gap is forms by third candle with weak parabol gap, will be retested if body become breakaway. What did you say? To lesson, if parabol gap is forms by third candle with weak fair value gap will be retested if body become breakaway. Okay, I don't know that, brother. I never see this like that way. Let me actually check it. So you are talking about that if it is to the uh, body and weak. I didn't see that. If you just can you please watch more price action if it works or not. If it works, please let me know. Okay, Asian Range Mastery. This is my request to you, brother. Please, whatever you write it down over there, do some kind of back test. I'm to be honest, I'm sick and I don't have that much patience as well to watch the market as I'm sick. Okay, so can you please watch that? If it works most of the time, please let me know that. Then I will go for that. Okay, any kind of information about that. Okay, please let me know that. Okay. Why future is clean? GBPUSD decided not to sweep equal highs. Future is always so clean, okay? Comparing with forex market, comparing forex market, future market is always very clean, always. After 2020, before 2020, forex market was much more cleaner comparing with the future market. But after 2020, I mean the COVID, future market is the only market where you will get the precision or this type of clean price action. Go back to your 1 minute breakaway. So I'm in 1 minute chart. This is the breakaway. So it has traded this breakaway. I mean, I have marked it, but actually it didn't work over here. Okay, nothing worked 100% of the time. So it didn't work over here. Instead of that, it has traded the order block level. And I told you beforehand because I am expecting this type of price action because I got a big run beforehand. So I'm expecting this type of price action over here, not the precise price action. But it didn't work. Nothing worked 100% of the time. I also told you. But whatever you say, I really didn't understand perfectly. I think you talked about the wick gap and the body gap. So if you talk about like that way, it came to this fair value gap. Now, am I interested to take buy? No, I'm not. Why? Because price has already taken the buy side liquidity. Though I have some other level of the buy side liquidity above that buy side liquidity, I'm not interested to take my buy. If it would fail to take that buy side liquidity, just think it came here, then it come to this fair value gap. What I would do? I would take my buy over there? Never, brother. Remember how I explained the dollar index when there was a very clean buy side liquidity? Price failed to take that buy side liquidity. Instead of that, it has made that buy side liquidity more stronger. So it can come here. Am I interested to take buy? Never ever. So this is the thing, brother. You have to understand, okay? Okay. Fair value gap in 50% area is high probability trade. I go for when just press tap to the fair value gap or maybe one tick above the fair value gap, I take my entry. I don't wait. I sometimes I even don't wait to see that market is coming exact level of the fair value gap. I even don't wait for that. I think price is going lower. Okay, it will use this fair value gap. I don't know, but this is my strong feelings. My strong feelings is telling me it will trade that fair value gap and then it will expand lower toward that sell side liquidity. That is my strong feeling, but I am not interested to do anything over here. Why? Because price has already delivered the price one time. If it would love to give me another setup, it has to do some kind of perfect thing. That means buy side liquidity taken, very nice market structure shift, fair value gap. After that, I will be interested to take that sell entry. Okay, otherwise I'm not interested at all. That candle you were highlighted the week. That candle you were highlighted is weak. Okay, okay. Whatever, brother. I will just give me a message to my Twitter. and give me a screenshot. Okay, that will be easier for me to understand because I really didn't understand what you mean to say. Okay, just let me know that to my Twitter. Just give me a message. That will be easier. Hey, ICT Product Report. I'm just going to finish my session, brother. I'm sick. How are you? Ah, I think that's all for today. Can you please tell me if it has taken Monday high or yet not on daily? Can you see Monday high yet or not on daily? Not on daily. This is the Monday candle, I think. This is the Monday candle high. It has taken the liquidity. The liquidity has already taken. When prices traded that area, that open, I mean the open or the close, whatever you say, the body level. When it traded there, it has already taken the liquidity. It doesn't need to go above that high to take the liquidity. It has taken the liquidity over there in one way. Now I go. I'm on the page and done with enough profit during London. Okay, so you are already got your profit. That's cool, man. But if you mark the high, then it didn't take the liquidity. Okay, 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 okay. I have the delayed data. Okay, brother. I'm not going to get the real data. I'm just delayed. Thank you for today. No problem. Read off and Asian. I mean the Asian Realms Mastery. Please don't forget to give me the screenshot. Okay. Remy, thanks very much. And oh, thank you, Remy. Either you have big delay at price. Either you have big delay at price. I have 10-minute delayed. I have the delay for 10 minutes, brother. I will make sure that very soon I am going to get the data plan. Okay. My friend ICT Ported Report, he knows that because from Bangladesh we can't pay anything. Even I can't. I can't take out my profit to Bangladeshi account as well from top step. They don't allow it. I am from a very developing country and it's very hard to say. I don't know. No problem. You are most welcome, bro. And thank you. Thanks for telling me that. I'm not going to do that. You know that. Okay. Thank you, guys. See you again. Maybe tomorrow, maybe another day, and we will be all together in my Twitter. Any of you are new, please subscribe to my channel. See you guys. Bye bye.